What is depreciation? The value of vehicles and equipment decreased because of wear and tear. That is depreciation. Depreciation is an expense for the business because it basically costs the wear and tear. You only put the wear and tear into a value. That's why it's an expense for the business. We've got balances there for vehicles, 115,000. On the last of the year, accumulated depreciation, 3,200. So that vehicles before we are going to work out depreciation now. So that is worth at the moment worth of 84,800. 84,800. You can see that it is still a new vehicle, but now we are going to work out the depreciation for this year, which is 15% on the diminished balance at the end of the financial year. So what we are going to do first, we are going to quickly put in our balances there. We put in our balances on the last of the year. Remember the year, we are done with the year. So it's 2019, February 28, balance drawdown. And it was the value of the vehicles are 115,000. Remember, this is a B account, this is a B account. So you don't touch depreciation or accumulated depreciation throughout the year. So this balance there on the 28th of February is the accumulated depreciation of all the previous years. And that was 3,200. 3,200. 15% on the diminished balance method. 15% on the diminished balance method. Okay, you must take your 115,000. You subtract the 3,200 and you work out 15% of that. There's your calculation for depreciation. Remember, we already subtract. We put the 115 there. We subtract the 3,200, 3,200, and then times the 15%, and that gives us 12720. 12720, and that is our depreciation for the year. The same story there. You put it on the debit side of depreciation. 2019, February 28, you put it there, accumulated depreciation on vehicles. The amount was 12720. Depreciation $12720. Can you see that you didn't touch your vehicles in the previous one also? So I'm quickly going back. Can you see that you didn't touch your equipment? Because we don't buy new or more equipment. You don't touch your equipment when you work out depreciation. You don't touch the vehicles when you work out depreciation. You only work out the depreciation. Total depreciation for the year that we are going to take to note number 3 is 3,200 plus 12720 gives you 42920. 42920. Your depreciation is an expense for the business. This is an expense. This is a negative asset. A negative asset. And that expense we are going to take to the profit and loss account because of closing transfers. Closing transfers. Last of the year, February 28, profit and loss. 12720, and we are done there. Before we take a break, quickly the accounting equation. Remember that the more your negative asset become, the less your asset become. Minus 12720, and the reason is because accumulated depreciation on vehicles become more. Depreciation is an expense minus 12720 because your depreciation becomes more. Thank you, grade 12. So we're going to take a 15-minute break and then we are going to continue because I want to finish all the adjustments today. Thank you very much. You can quickly take a break. See you. Thank you, grade 12. If you can quickly sit down so that we can continue with our adjustments. We are done with trading stock deficit, trading stock surplus, consumable stores on hand. We are done with depreciation on the cost price and depreciation on the diminished balance. So we are with the bad debts now, number 6. What is bad debts? Debtors that cannot pay their debts must be written off as irrecoverable and taken out of the books of the business. That is a bad debt. Debtor R. Skumbi owes the business 8,900 Rand on the 28th of February 2019, the last day of the year. She's declared insolvent and the estate pays out 30 cents in the Rand. The rest should be written off. There's our adjustment. We've got a debtor there. She's insolvent. She cannot pay everything. So in our debtors control, we assume that she's our only debtor. 2019, February 28, we've got a balance there. And she owes us 8,900 Rand. 8,900 Rand. Now you take the 8,900 Rand and you split it between 30 cents and 70 cents. So you take your calculator, 8,900 times the 30 cents gives you 2,670. That you are going to receive, that's in the CRJ, 8,900 times the 70 cents per share, or no, sorry, 70 cents in the Rand, gives you 6,230 that you're going to write off as bad debts in your GJ. There's your amounts there. We've got the information. So on the credit side of debtors control, it is 2019, February 28 in the bank. Sorry, I haven't got a bank here. CRJ 2670. I haven't got a bank account at the moment. And then bad debts. The remaining amount is bad debts of 6,230, and then you will see the 2,670 plus the 6,230 gives you the 8,900 Rand. So this debtor didn't owe you anything more. She owes you that 70 cents in the Rand, but she cannot pay you. Okay, there you are. And then remember, this is the debtor. And we took her out of our books because she can't pay us. So we're not going to give her, to sell to her on credit again. In your bad debts 2019, February 28, debtors control, GJ 6230. And this is an expense for the business because it's money that we lose. And this we are going to take to the profit and loss account at the end of the year. During the break, I quickly look at the first one that we did. And I just want to quickly show you that, sorry that I come back, but your trading stock deficit also. Go to the profit and loss account as a 1,600 expense because the stock taking was less than the books, and your trading stock surplus also go to the profit and loss account. Remember, it's not both of them, it's either the one or the other one. as a 800 Rand income because the stock taking was more than the books. So all the nominal accounts we close off to the profit and loss account. Owner's equity, assets, owner's equity and liabilities. Your debtors become less. So it's plus 2670 because of the money in the bank becomes more. Are you with me? That was the 30 cents in the rand. That one was for the 30 cents in the rand. The 70 cents in the rand was written off as irrecoverable. So we've got minus 2670. Sorry. Cancel that one. Minus 6230 because of the bad debts. That become more. That is the 70 cents. But in the meantime, remember that your debtor owe you minus 8,900 Rand. The debtors become less. And now you must remember that there's an equal sign there. So the assets must be equal to the owner's equity. So if you quickly take your calculator and you put on your calculator 2670 plus 2670 minus 8,900, then you've got minus 6230, which is exactly equal to the owner's equity. First we did the bank. The bank become more, the bad debts become more. And then remember that your debtors become less.